Hey everyone, hope you're having a good Friday. We'll get started here in just about 20 seconds. Appreciate you all tuning in. Thanks for the likes and shares and all that. Let me know where you're tuning in from. I'm drinking some blackberry mint juice, water, sun tea. Got too many blackberries to eat, so I stick them in water. Ready for a beer after the market closes. We're going to look at the broader market. We're going to look at the dollar, the relationship between the stock market and crypto, and where we stand heading into the weekend. Slovenia. Can't say I have any idea where that is. I'm going to have to look on a map. Seattle. I haven't been out that way yet. I need to get up to Washington. Mount Olympus. All right, we're going. It's 2:02. So, we've got the broader stock market. This is the NASDAQ in a beautiful equilibrium. Inflation, CPI, the start of financial sector earnings, housing market, recession, equilibrium, the most common pattern in markets. As soon as after this bounce we pulled back this significantly, we knew keep an eye out for an equilibrium, because when you have a wide range of volatility, more often than not, that range tightens up. And we know that volatility is coming back when this pattern breaks. That being said, it could be another 3-4 days. For example, today is Friday. If Monday we still see a little bit of green, Tuesday we pull back, Wednesday we pull back, Thursday we bounce. Next thing you know, it's towards the end of next week and we're still in this equilibrium. That's a possibility. But right now the short-term bulls have control. It's an hourly bull flag attempt, really just a 15-minute tightening range right now. And we're watching for signs of daily lower highs. Why are we watching for signs of daily lower highs? Because the last time around, that was the right idea for the bears and for bulls that wanted to be protective. We were rejected from resistance and we continued tightening up, and that can still happen. At this point in time, from the low of the CPI reaction, we have bounced 4%, and from where we stand, we still have another 2% to go. Because of both of these resistance levels, they're so close, I don't care about the first level. I'm aware of it. But if we don't break the second level, it doesn't mean anything to me. So it's the second level that is the level that must break if we're going to call this a successful bull break. Keeping in mind, if this breaks bull, we zoom out, and anything under 12.943 is just a weekly lower high. So that's part of the zoom out game. We have to be watching for that possibility, because if we were to break bull, we zoom out and it's possible that that bull break would just result in a weekly lower high, and then we watch for a weekly trend change attempt. But one step at a time, just aware that that's a possibility, but we're watching the daily equilibrium. I just realized we've got the Super Bowl of fundamentals coming up for the broader stock market the last week in July. We have the FOMC, July 27th, and that's also the highlight of earnings season for big tech. Apple's got earnings that week. Let's see who else has earnings that week. Microsoft has earnings that week. Google, earnings that week. Amazon, earnings that week. It is all that we know. The tech sector is the most important sector in the stock market as far as its weight and its holdings and all these ETFs. So all of those major names, along with the FOMC, all within a 3-day window. It's going to be very interesting, but that's still a week and a half away. One day at a time. So bulls have short-term control. There is no sign of a daily lower high shaping up right now. Like you can see, Amazon's doing the exact same thing as the NASDAQ, which is doing the exact same thing as Bitcoin. So we have the dollar. We've got the daily in an uptrend. We had a daily bull flag confirmed. And we now are starting daily consolidation. This shows me signs that the bulls are tiring. We know weekly consolidation is overdue. I would call anything above 101.29 a weekly higher low next time we consolidate. So I will be anticipating a weekly higher low will be the result of that consolidation. But again, we're just keeping an eye out for the potential of the dollar bulls tiring. If you are a crypto or stock bull, what you want to see out of all these little clues, these little pieces of the puzzle, you want to see dollar weakness. You want to see the VIX break this weekly equilibrium bearish. Again, many month equilibrium. You want to see 2374 break, which we're right above. You want that equilibrium to break bear to help the stock market and crypto equilibriums break bull. And you want to see the 10-year also show weakness. And so the 10-year stock and crypto bulls want to see it give back this bounce, fail to confirm the daily trend change, and head back towards the recent low. So again, these are all just little pieces of the puzzle. They are not required for the bull break to take place in crypto, but they would help. Bitcoin divided by the NASDAQ bounced right off of support, remaining range bound. We have been within this range now for a month. This is going to give us clues. Let's say Bitcoin breaks its sideways range bullish, but this chart does not break bullish. That's a little bit of a red flag. Doesn't mean the bulls can't see gains. It just means I'm going to be taking profit faster if that's the case. So if we see these tightening daily ranges break bear and this chart does not break bear, I might add to a swing position in Bitcoin and in some altcoins. So again, I'm just using this as one little piece of the puzzle. So far we've got the dollar, the 10-year, the VIX, and this correlation chart are all pieces of the puzzle that we're watching, along with just our regular old price charts to help us with clues and to help us with confidence. When the break does happen, do we check off all these things as following through, or I should say affirming the direction of the break or not? Bitcoin bounced right off support. And this has been, if there's one thing we can't complain about, it's the clarity that we are seeing in a lot of these daily setups. Bitcoin support 18.6. We bounce above that level by $300 and hold it. And again, if you're talking risk to reward, Ethereum's a better example because we double topped at resistance rather than breaking with no follow through. But if your risk is $500 before stopping out, your reward is now approaching $2,000, which again is your ideal risk reward, 4 times the potential reward for the risk. So what we're watching for in the short term are clues that daily lower highs are shaping up. Aggressive bears, actually at this point it's patient bears. Patient bears are waiting for these daily lower highs, and bulls that want to hedge their positions are watching for daily lower highs. What's the first indication that a daily lower high is shaping up? Signs that a 4-hour uptrend is being lost. So we have a clear 4-hour uptrend right now on Bitcoin. Higher low, higher high. I'm viewing that all as one move. And now we're looking for another higher low. There's a little wick in there, but I'm ignoring that personally. And I'm saying, for me, anything above 19.6 is a 4-hour higher low. Looking at it from the hourly perspective, we can draw an uptrending support line, just as a visual guide to be keeping an eye on. We can draw an uptrending resistance line as a visual guide to be keeping an eye on. Pretty much a channel. I would just be watching this channel, and I'm just focused on this price action ever since this, was that CPI? CPI reaction. So plenty of resistance touches, only a couple support touches, but if we see another pullback here and form a 4-hour higher low off of this level, then that will affirm to me that this channel is very key to be watching in the short term. So at the moment, we are weaker than the broader market in today's trading. Why can I say that? Because both the NASDAQ and the S&P 500 are attempting these hourly bull flags. So we're still right up near the high of the day for both of them. Is Bitcoin right up near the high of the day? It's not far from it, but no, it's not quite as close. But overall, the 4-hour is still strong. 4-hour EMA 12 support, and the higher lows are our guide. The dominance chart is not giving us any information. not giving me any information because it's been sideways for a month. It's essentially doing the exact same thing as the correlation chart. The correlation chart has been range bound for a month, as has the dominance chart. So I'll keep an eye on it. Once our equilibrium breaks and the pressure is building, that's the thumbnail for this live stream, because we know the tighter we get, the more follow through we're likely to see when the break takes place. And so the pressure builds the tighter you get for that follow through, because when the break takes place, you either get a bunch of longs stopping out and a bunch of shorts entering new positions, or you get a bunch of shorts stopping out and longs entering new positions. And so the dominance chart, when the break takes place on the Bitcoin daily chart, I'll view the dominance chart and say, which direction is it breaking? If it breaks bull with Bitcoin breaking bull, I don't want to confuse people, but let's lay out every scenario. Bitcoin breaks bull, dominance breaks bull. That means Bitcoin's leading the way up, and we want to then see any consolidation to remain very healthy on Bitcoin and see the dominance chart drop harder as the altcoins play catch up. Scenario 2, Bitcoin breaks bull, but the dominance chart breaks bear. That tells us altcoins are leading the bull break and seeing more follow through. Bitcoin breaks bear, dominance breaks bear. That tells us that Bitcoin is leading the way to the downside. I think that's the least likely scenario, because in my opinion, if we're breaking bear, I would imagine alts are dropping harder. Bitcoin breaks bear, dominance breaks bull. That shows us altcoins dropping harder than Bitcoin. So that's the only four things that can happen with where we currently stand. So that's the information we're going to look for when the break takes place. Again, I'm still favoring a bull break for a number of reasons. Number one, the volume climax on our altcoin charts, just looking for a weekly bounce, even just for a lower high. Number two, recently, bearish CPI reaction, bearish initial reaction to financial sector earnings, and the broader market is still holding support. I'm very impressed with the defense that the bulls have played this week. So, sticking with that conviction, and if I'm wrong, then we'll see. But Ethereum, right off of support. We held support by $8, less than 1%. Again, the risk to reward for shorts top fishing is $5, $4.50 of risk. Obviously, you're not going to nail the top, but a very small amount of risk with big reward. And then for bulls, a very small amount of risk with big reward. Are we going to top out and fail to break 1280 and form just another lower high and continued tightening range? It's certainly on the table, and it's what we're watching for on the 4-hour time frame. 4-hour stair-step pattern with a higher low every single candle, just broke bear with no follow-through, which means it's a potential 4-hour bull flag. But we got to be cautious of this 4-hour RSI, because again, look back here. Look at where our tops have been forming. Just under 70 RSI. Come on, paintbrush. Just under 70 RSI, just over 70 RSI, and here we are just under it again, and we could still go up another 3% and still be under resistance. So aggressive bears are looking to top fish 1280, and hedging bulls are looking to potentially enter short or just sell some. One thing that I will do, one strategy of mine, is I will take I'll make an insurance trade. So what I mean by that, let's say I'm long, which I am, Ethereum. If I had a larger position size, I would be scaling some out right now. So let's say I have a full position of what I want for the potential bull break on Ethereum. And let's just say that I sell 25% of that at 1230, just in case we reject and keep tightening up, and then I can reload it cheaper. If we then break 1280, I can then add that quarter back, and I miss out on that amount of profit. But again, that ensures a bit of insurance where if we pull back, I can reload cheaper. And worst case scenario, I'm just leaving a little bit of profit on the table as opposed to giving profit back if I don't sell anything and we pull back into continued tightening range. So 4-hour uptrend is key into this weekend, and it's going to be our guide for whether or not daily lower highs are shaping up. And of course, not all altcoins are created the same. I should say not all altcoins are positioned the same. So we have altcoins that have already broken these tightening daily ranges, and they are our lead bulls. We have altcoins that are much further away from daily resistance, than Bitcoin and Ethereum currently are, they are our lead bears. They have a higher probability of being unable to break daily resistance. So we're going to look at a few of these altcoins in just a moment. ETH BTC is testing a very key resistance level. If I'm an Ethereum bull, I would love to see the BTC pairing break this triple top and lead the way even before the US dollar pairing breaks. Look at the beautiful hold of support. And now trying to break this resistance and get to the relatively strongest point that Ethereum has been comparative to Bitcoin in 5 weeks. If we get over 591. So we're right there testing resistance. And again, that's what you want to see as an Ethereum bull, which would tell you Ethereum is the better place to be as a bull than Bitcoin. Got to keep an eye on the broader market here, as I do have a little bit of a short position on just to protect my longs. Just top fishing the high of the day. 15-minute uptrend remaining intact. All right, so other altcoins. Matic was our clear lead bull from the live stream on Wednesday, and we saw very notable follow through from that. But today, it's standing out as a lead bear. Let's look at our list here. It's at the bottom. So why is it shifting? Well, bulls were extended, and they're taking a breather, and other altcoins are getting some attention. Same thing's happening in the stock market today. So Apple has been our lead tech bull the entire way up. Yesterday, it hit the highest level on this entire bounce. Today, Apple is up 0.5%. I then look at Amazon, which is not a lead bull over the last couple of weeks because we're not at the high of the bounce, but it's up 4% plus today. It's up percentage-wise 8 times more than Apple. Apple is taking a breather, and other names are getting rotation. Netflix is up almost 8%. It's been a beast today. Earnings approaching on Netflix. So we're seeing the same thing in the altcoin space. Matic is taking a breather, and Matic is close to breaking a short-term support level. Look at this base, 677 and 671. If that level holds, it's a 4-hour bull flag. Keep it simple. If 677 is support, it's a 4-hour bull flag. If 677 is lost, we're going to zoom out for the potential of daily consolidation, and we'll then scout a daily higher low. Are there any clues on the BTC pairing that is showing us any weakness? It's a little bit weaker, so bulls would have to be cautious of a lower high forming next bounce. If we see a Matic BTC 4-hour lower high form as the result of the next bounce, even if the US dollar pairing sees a higher high, it's a red flag of bulls losing some momentum. But for now, I don't see any red flags on this 4-hour consolidation. I'm just making note that it is more significant than the US dollar pairing. So the BTC pairing is showing slightly relative weakness. Other names, Atom, heading up towards resistance. So again, if I'm long Atom and want to hold for more follow through, I can be looking to take some bullish position off here. I can be looking to try and short under daily resistance other names to try and hedge in case we reject. Because again, if we do reject in the crypto space here, we can easily pull back 5% plus. So 4-hour is our guide. Still easily very strong. We're going to look for a 4-hour higher low to be the result of any consolidation that we see from here. Essentially, we're just watching for signs on names that have not started 4-hour consolidation. Is it shaping up? Grinding EMA 12. So we can say that Atom, as long as hourly EMA 12 is support, we're not going to see any 4-hour consolidation. We have to lose hourly EMA 12 for that to take place. Atom BTC, is there any difference? No, it's doing the same thing. But again, watching for signs, is Atom BTC going to reject from daily resistance or not? We're just looking for clues. Just like when I'm looking at stocks, I'm looking for clues in the dollar and the VIX. If I'm looking at an altcoin, I'm looking for clues in the BTC pairing. And this year for me in stocks is the greatest leap that I've taken as a trader in 12 years of trading in terms of recognizing correlation and having that benefit my day trading. And it's because of the crypto space. and it's because of the correlation watch on altcoins and their BTC pairings and the information and the clues that it can give us. Sand, nice and clear, but look, it's a little bit weaker. Sand is in the red today, so that to me increases probabilities that we can see a daily lower high form. Look at the 4-hour time frame. That 4-hour consolidation, still overall, no major red flags with it, but it's clearly consolidating while a name like Atom is not consolidating yet. So we're going to look for a 4-hour high or low, anything above 110. Let's talk about how to make these entries. There are 2 ways to make bearish entries when you're top fishing. You scale in a couple orders right into the face of bull strength, and you set your stop over the high. That's what an aggressive bear is going to do. What a patient bear is going to do is say, all right, I know I'm scouting a daily lower high, but I'd like to have a closer level to play off of. I don't want to just scale in here in the mid 120s for sand because that resistance of 132 is still too far away. I don't like that risk to reward. That's too much risk to validate the amount of reward I could potentially see here. So I need a new level to play off of. I don't want to play off of 132. I want to look at this and say, if our daily lower high is being set at 123, I will have a good position. So how do I position for that? Well, we're anticipating a 4-hour high or low is the most likely scenario. If we bounce from here, I then look to top fish this level and look and hope for a confirmed 4-hour downtrend. Because if that were to play out, we would then say, yeah, that's our daily lower high, and the tightening daily range is going to continue. This is how I take a ton of trades. I know the most likely scenario of what I'm looking for on a setup is a lower high with a longer term time frame, but rather than playing off that longer term time frame's resistance level, which is too far away to justify the amount of risk, I zoom in and I look for details that are showing me the new lower high is being set. And once I gain enough confidence to say that's either the new lower high or I am wrong, I then enter the position to play off of that level with my stop. And the risk reward profile of the trade is then much more favorable. If I'm going off 132, again, my risk, let's just play fantasy land here. If we get a bounce to 121 and I look for that 4-hour lower high short, if I'm going off 132, my risk is 11 pennies. And if I'm going off of 123 and change, let's call it 124, I'm risking 3 pennies. My risk is almost 70% less. Sand BTC, got to be cautious of a head and shoulders here. If we confirm this daily downtrend, it is a notable red flag for weekly consolidation to then be underway. So I'm keeping an eye out for sand to potentially be a bear, but we would have to confirm that daily downtrend. But what's happening on sand BTC? It broke the low of yesterday. So we're seeing a clue showing us relative weakness in sand with the BTC pairing breaking the low of yesterday, while the US dollar pairing is not close to that low of yesterday of 110. We're still 7% above that level. So again, just a little relative clue. It might not play out. If it does play out, that's the first sign. BNB, still tightening up, keeping an eye on Binance. I'm keeping an eye on Binance as long as BNB BTC is near its all-time high. There are not many altcoins whose BTC pairing could potentially see a new all-time high sooner rather than later. And it's possible looking at the monthly perspective, yes, we could keep tightening up here for a while. You know, if we set another monthly lower high and then a monthly higher low, next thing you know, it's the end of the year. But we're right there. And that is notable. You know, I look at this chart and I see a clear tightening range, but I say as long as monthly EMA 12 is support, the bulls are in control of this long-term relationship to Bitcoin. So for that reason alone, Binance is always going to be on watch for me as long as that is the case. So again, the way that I use this list is I organized this list a few hours ago from strongest to weakest, and I can see the changes taking place. I see this 0.9% green in the middle of the red, and I know that ENS has gained strength in the last couple of hours. I see this 0.4% in SOL mixed with a bunch of 1 and 2%. I know SOL has been weakening over the last 2 hours. So that's my way of visually being able to quickly see who's gaining strength and who's weakening based on when I last organized this list and how it has shifted in that period of time. GMT is showing me relative weakness the last couple hours. Nice rising wedge bear break. Posted that this morning. Forgot to follow up on it. Hope somebody in the chat room got that. Somebody was paying attention to it. Man, that was forever ago. 8 hours ago. 1, 2, 3, 4, 5, 6, 7, 8. So it was one more little lower high. Look at that top fish. 95.6, 95.4, 95.3, and then we roll over. That was a good one. All right, I'm reading the chat room now. I lost the chat room. There it is. Nothing is a back burner trade right now. For bulls, nothing is a back burner. Back burners come from bullish, notable strength. And we obviously don't have that in the crypto space. You could look at something like Matic from yesterday's big bull move. And again, you have to take it with a grain of salt because you've got to look at the sector as a whole. The highest probability of back burners are when everything is strong in the sector. But you can look at a name like Matic and say, you know, okay, big bull move. I'm watching first 15-minute oversold conditions for a 4-hour high or low. But don't treat it the same. Take it with a grain of salt and say, yeah, I can be scouting that bull trade, but I'm well aware that this is not your ideal back burner because we are not in a bullish market. XMR. So XMR is testing its recent high. So key short-term support is 132.8, and key resistance is the highest level that we've seen of 137.10. We already broke daily resistance, so it is among lead bulls. We do not have a daily equilibrium. We have a tightening range bull break. So without even looking, I know XMR BTC has broken bull to its highest levels in over a month. Got to be cautious of wow, I'm not drunk yet. Got to be cautious of a rising wedge on this BTC pairing. I would just watch, maybe not that resistance line, but there is a resistance line I would watch here just because of the bull break with the lack of follow through. And it would be that right there. It's a channel. Just something to keep an eye on. Again, if I'm in a bull position and I'm liking the fact that XMR USDT broke resistance and I don't want to sell that position, I put on my bear glasses and say, okay, I'm going to keep holding this position and look for follow through, but I just got to be a little bit cautious because if this BTC pairing shows us the inability to break resistance with follow through and then rolls over into weakness, that will be a red flag. So you can outline what will be a red flag, and there's not really a strong red flag at this point, but you can be prepared to quickly recognize and react to the red flag when it does, if it does, present itself. KDA. So still in a tightening daily range. Anything under 169 is just a lower high. So bears are in full control as long as daily lower highs keep forming. Lower high, lower high, lower high, lower high. Anything under 169 just keeps that pattern going. Keep it simple. There are very simple ways that we can just make a simple, clear, if-then statement. If KDA is forming daily lower highs, then the bears are in complete control of its chart. Can that shift? Absolutely. Are we watching for it to shift? Yes. But if it does not shift, nothing changes. You don't have to go in depth and analyze and look at all these different technicals or these different indicators. what's the volume profile? What's the Ichi cloud doing? Keep it simple. If we're forming a daily lower high, nothing changes in this chart. And there's definitely a lot of over-analyzing that is done when price action can give you that simple statement. And people spend 2 hours analyzing and looking at indicators to try and fit their bias when it all boils down to the price action. So if we lose the 4-hour uptrend, a daily lower high is set, and we're then looking back down towards the 141 recent low. Currently a daily inside bar. Still a 4-hour uptrend. If we were to break 155, it would be the first indication of the daily lower high potentially being set. LTC, BTC, I'm paying attention, but another simple statement, if we do not break 2597, then the bulls don't prove a thing. If that level breaks, I'm paying attention because that's our weekly high or low being set and a weekly potential trend change is shaping up. Why do I care about the weekly potential trend change? Because we have not seen one in over a year. So if you're seeing something on the chart for the first time in X period of time, and it's a long period of time, you're paying attention because the character of the chart is changing. But if we don't break that daily level, we're not setting the weekly high or low. $99 likes, who's going to push us to 100? If you're scouting Bitcoin for a lower high and lead bear 1 is at support, I assume you mean at resistance, and lead bear 2 is further from resistance, which do I choose? I choose the better risk reward setup, which generally speaking is the name that is closer to resistance. I can wait for a new resistance level to form on the name that is further from resistance and then play off that lower level, or I can play the stronger name, but the risk is much smaller, and then hope that that strength then transforms into weakness or shifts into weakness. So I talked about that in my rant 10 minutes ago about waiting for a new level so there is lower risk. Uni, nice bull move, clear leader. Nice volume spike. It's doing the same thing as Matic where it led in a big way yesterday and now it's cooling off and taking a breather. 4 hours looking for a higher low. EMA 12 still support, no red flags. If we lose the 4-hour uptrend, I'm going to draw this resistance line and keep an eye on it. Meh. Let's follow through. So I was going to try and look for a rising wedge here just to, again, put on my bear glasses and be cautious. But resistance was 662, and we got all the way up to 726, so that's 10% of follow through. Remember, a rising wedge, falling wedge, the trademark of that pattern is breaks that lack follow through. So I would look at Uni and say, that had follow through, so it's not really a rising wedge shaping up. The question that we have, is daily consolidation going to shape up? As long as we're in a 4-hour uptrend, then it's not likely. But again, what we would have to be cautious of, and what would shift momentum, is if we pull back significantly enough for the 4-hour high or low, we then fail resistance and confirm the 4-hour downtrend. Bitcoin, yes, we will just be expecting a 4-hour high or low next consolidation. But again, same thing. Is it enough of a pullback that then creates space for the lower high, or is it a bull flag pullback that then favors continuation? Would micro futures be a good way to get into stocks and avoid the pattern day trading rule? I couldn't say. I've never traded them. I don't know the liquidity and the volume and things like that. But it's worth a shot, worth checking it out, absolutely, to get around pattern day trader. Again, it's such a dumb rule. Pivot indicator I'm using is pivots high low. And we've got a video that shows how I set up my charts and how Lori sets up her charts. So I'm posting that right now in the comments of this stream. Again, it tells you Joey goes through Jungle Funk and shows step by step how I set up my chart. And I will post that link in the comments of the video as well. When I talk about breaks, I don't care about candle closes. If I'm using trend lines as a visual guide for rising wedges, falling wedges, then I'm watching candle closes. So ICP, we were watching this last stream, we were watching this 4-hour falling wedge for the bulls attempting to shape up the daily high or low. And it broke bull, and that set our daily high or low. So I care about candle closes when I'm visually watching a pattern like this. But if I'm looking at price levels, I don't care about candle closes. I care about the price breaking. So if 748 is resistance and we break 748, it's a break. Now it can lack follow through. If we break it and get to 751 straight into hourly consolidation, that's a red flag. But a break is a break when price levels are what you're going off of. Did cover Matic and Uni. Thanks, Gimbal. Glad to have you. QNT. Just do a few more here. QNT looks like a real nice 4-hour bull flag. No red flags at this point. Keep it simple. 4-hour EMA 12 has been holding for a couple days. If it keeps holding, the bulls keep their complete control. That's a lead bull. There is absolutely nothing wrong with this chart whatsoever at this point. Increasing bull volume. Daily bull flag confirmed. Many names are trying to get to their highest level in a month. We're getting to our highest level in 2.5 months. We got tons of space for a daily high or low. We're not going to lose sight of the weekly and the bigger picture here because we know we will have to confirm a weekly trend change. And then we're going to have to confirm a monthly trend change. It was a nice monthly stair step. Lower high every single month. That pattern broke bull at 73.20. And we went 50% from that signal. Look at growth names in the stock market. Look at the biotech sector. Monthly. Stair step drop 1, 2, 3, 4. Nah, there was one candle there that ruined it. Bad example. ARKK. So ARKK is trying to do it now. Monthly stair step drop. And that monthly inside bar broke bull. We're lacking follow through at the moment. Bulls are hoping, an arc bull is going to look back at that, what was it? QNT chart and say, I hope our monthly chart follows through like QNT did. But that's a strong chart, certainly relatively speaking. Pivots, high, low, settings, inputs. And 5 is just my personal preference. I just put in a number and that looks good enough to me. Again, I don't use those pivots. I put them on my charts so you all can see them. But after a number of years, your brain just does that automatically. It's nice. It saves time. I don't have to hover my mouse to see what the level is. All streams are saved to the YouTube channel. Yep, Lori is killing it on pre-market, absolutely. All right, last one, AAVE. Daily continuation, so we know it's a lead bull because we're at the highest levels. Again, it's doing the same thing as the other lead bulls of Matic and whoever else we just looked at a couple coins ago. But big lead bull yesterday, taking a breather today. 4 hours, still an uptrend. but have to be cautious if we were to lose the 4-hour uptrend into daily consolidation, then we would just be looking for a daily high or low. So again, if you're a bull, one moment. If you're a bull on a name like this, you need to ask yourself, am I going to hold through daily consolidation or not? We know a daily high or low is the most likely scenario next pullback. So are you going to hold through daily consolidation or not? If the answer is no, then you're focused on those shorter term time frames for clues that tell you to exit that position before daily consolidation begins. If you have decided you will sit through daily consolidation, you're not worried about anything. And there's nothing you have to do. You're just going to watch what daily consolidation looks like the next time we see it. You're going to watch the volume behind it. You're going to watch the relative strength and weakness by watching AAVE by BTC to ensure that it forms a nice daily high or low. But obviously you want to have that decision laid out beforehand as to whether or not you're holding through daily consolidation or not. All right. Love you all. Have a great Friday and a great weekend. Might go see some music tonight. Got an ecstatic dance tomorrow with someone who plays kalimba. Kalimba man, he is always fun to watch. Best kalimba player I've ever seen, which is that little, I think it's African wooden instrument with the little metal pegs. He is insane. And of course, with technology these days, he can make a guitar on that. He can make a keyboard. He can make it in any instrument he wants, and he loops it. So that's going to be a lot of fun. A static dance with a bunch of hippies. Do good things.